The broadcast is now starting. All attendees are in listen-only mode.
Good morning, good afternoon for everybody, depending on where you're signing in. It's Brian Caprice from Keep Trading Simple, and we are welcome to today's market update, current market analysis and identifying potential opportunities. I'm pretty excited to be with you guys today. So this is kind of one of those interesting weeks to be able to trade the markets. And the reason why is because it's not chock full of news like we normally love to see here on this channel, but what we have is tons and tons of speeches. If you guys are unfamiliar with speech weeks, that's what I've been calling them lately. Speech weeks, there's a lot of headlines. There can be, I don't know, it's kind of like lighting like an old firecracker, an old package of firecrackers, right? Half of them aren't going to work. The other ones make a really loud noise because they've just been sitting there and they were built good, right? So you never know what you're going to get this week. It's kind of again, there's plenty of movie quotes we could throw out on this one, but it always makes it definitely interesting to trade. And again, if you guys are familiar with all the different Nadex products, it's like the perfect opportunity because again, we really don't know this week. And there's a lot of different fun strategies that we can trade. So, I'm excited to dive into the charts and show you guys some of these kind of different looks on things that I use inside of, basically speech week, right? So before we begin, for those of you that are new, welcome. Again, I'll give you guys a quick 30-second highlight of who I am, why I do these for Nadex. I'm the president and CEO. I can't talk this morning. I've been on cough drops all morning because of these allergies with the season changing here. But basically, what I do is I try to keep trading as simple as possible. I remove a lot of the distractions. I'm not an indicator-based trader. I basically use supply and demand. I'm a price action trader. So I read candlesticks, how they're formed, the reactions off of them. I definitely use multiple time frame analysis in everything that I do. And I definitely am a loophole trader. When I mean loophole trader is I understand the pros and cons of the different asset classes out there and how to use them to their best benefit. Okay. I always get asked, why do you do these broadcasts for Nadex? The reason I do is because, I started trading back in 2000 and I learned traditional options and stocks way back in the day. I eventually found currencies, learned to trade, futures. I was a financial advisor for a short time, learned about bonds there. I didn't know anything about bonds before I got there and realized very fast that advisors were not the inside market technicians that I thought. And I realized that I knew more than 99% of the people there. And as far as reading a chart and trading a chart, and when one of the biggest guys in the entire company, as far as assets under wealth, asked you to look at his charts and look at his stuff, being the new guy, it really makes you open your eyes. And I realized that my passion is teaching people. So my goal today is to give you guys at least one golden nugget, maybe something I say changes the way you look at a chart, makes you just a little bit more profitable. Heck, maybe it gets you placing your first real live trade, taking that first step, getting out of demo mode, coming to live trading. It doesn't necessarily matter, but I want you to take something away from today. And each and every week, that's my goal, is that everybody gets at least one thing out of here. All right. And if you have questions, I'm more than willing to ask, answer anything that you guys want. So with that said, let me dive into a disclaimer real fast because we are going to talk about charts and potential risk and things like that. The trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile and investors risk losing the cost to end of their transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes including Forex, stock index futures, and commodity futures. And Nadex is a registered trademark of the IG Group, if you guys were unaware of that. Now, what we're going to cover today is the upcoming news events. As I mentioned, we don't have a whole lot of economical news releases, but there's a lot of times this week you got to mark off. So again, we're going to go through that. We'll go over to Forex Factory, the site that I use for the scanner, as well as just kind of news and what's going on. Then we're going to break down the indices and we'll see what we have going on and potential levels. It hasn't been kind of an explosive, I'd say 7 days since we talked last, but definitely some of the levels that we talked about last week have had 2 and 3 successful trades off of, and there's been multiple ways you can play that. Then we'll go into Forex. Now, Forex has had a lot of opportunities. Today is actually a day that has a lot of quotes. You guys remember last week I mentioned that we need to be very careful with the B word right now, Brexit, right? That we were getting very close to the October 15th deadline that the UK put out there. Well, I got a very interesting quote from the EU to show you in just a few moments here. in regards to that deadline. Okay, and again, that drives some trading, some movement around. Again, when there's that type of finger pointing, we love it as traders. And then last but not least, I'll go into commodities. And commodities is extremely important to look at right now. Reason why is because of some of the quote that Jerome Powell made just about an hour ago, not even probably an hour ago, talking about inflation. Okay, commodities is definitely one of those markets that is probably more driven by inflation than any other market. I mean, when I say commodities, I'm talking about gold, oil, silver. Um, Again, gold in particular. I mean, it's linked hand in hand. It's married basically to inflation, right? We all know this. We did the presentation a few weeks ago on gold and people's opinion of it. But when quotes about inflation from Powell, obviously can drive the gold market, so we want to cover that. So a lot to cover. Let's go right into, I would say right into the charts, but I want to go over to the news site first. So again, this is a free news site. This doesn't cost anything. I like this one because it has everything right here, very fast. It's not the best. You're not pulling charts or anything like that. For those things, I will obviously use daily effects on that one. They have all this information, a couple more drop downs and things like that. This is kind of the old school original, right? No fancy bells and whistles, but again, I will use daily effects as well. If you guys, you can find all the same information there if you like it. So for me, first things first, scanner wise, you're seeing there's not a whole lot of market movement. Obviously, the pound's got a little bit here, down 48 versus the yen, down 35 versus the dollar. Dollar's more or less flat, and a lot of this has to do with what is Powell going to say? Is he going to say it's a big? Is he not going to say anything big? And you'll notice Aussie dollar being down 34. This is directly linked to his comments, again, right here about his economic outlook. But more importantly, where is it? Are they going to show it down here? Right here. Powell is still seeing downward pressure on inflation globally. Okay, again, this is why people have been like, oh, gold's going to $1 million because, hey, inflation, right? Low interest rates. Globally, we're seeing lower pressure on inflation. So again, the new interest rate environment may be what is standard practice now. We may not see hyperinflation, particularly where we are with, the world economy being, as high as it is relative to where we've been recently. So as you can see today, whew, ECB president speaking, ECB president speaking, Fed chair speaking, FOMC member speaking. And again, it's just nonstop, right? All day today, there's no true economic releases that we really need to worry about. There's no retail sales or non-farm numbers or anything. It's just speeches, right? So as far as today goes, I don't think there'll be too many other blockbuster comments that we really need to worry about. We should see a trend after lunch kind of start and follow that through. And most likely we'll probably see an end of the day rally. Obviously going into closing last week and going into the weekend into Monday, the biggest concern on the market was President Trump and COVID-19. He's now out of the hospital. Again, things could have taken a kind of crazy turn this week. Again, just would have imagined what would have happened to the market. Say his condition turned really, really bad suddenly. And I don't know, say Monday morning, we got news that, Pence had taken temporary control over it because, President Trump was incapable. Imagine what that would have done to the markets. Now, that didn't happen. He's actually out. I think he's back at the White House now. He's feeling great. Obviously, low severity of symptoms and things like that, and it's always great. Like them or don't like them, again, we're all human beings. It's always nice to hear that somebody is recovering for any type of illness. And again, best wishes that, again, everybody that has it has a speedy recovery. So we kind of dodged a bullet on that one. That one could have made this week very, very nuts on top of what we already had. But you can see as far as today, just speeches, right? Going into tomorrow, it's a lot of the same thing. Oh, here, let me switch it back, actually. Put it back on apply filter. Okay, I don't need the weak speeches right there. All right, so and you can see nothing really changed here. Tomorrow, basically, we don't have much. Okay, again, ECB president speaking again at 8:10 a.m. Eastern Standard Time. At 10:30, we have our weekly oil inventory report. Now, oil last week, I don't know what the heck was going on, but oil just was dropping through the floor last week. The one morning I logged in, it was down like 4.5%. I was like, what the heck? No headlines, no news of oil rigs or anything like that, basically doubling themselves, right? Like, hey, guess what? The oil rigs are magically producing twice as much. I mean, there was nothing, and it was just falling through the floor. And again, going into the fall, I don't know, we'll see. So we have that number 10:30, and then again, we have FOMC meeting notes. Now, FOMC is kind of the analogy that I mentioned earlier, right? What I mean by that? Well, pretty simply this. It's like an old package of firecrackers that you had in your garage for 5 years. It may provide a lot of noise and a lot of explosion. It may just be a dud and do absolutely nothing. But as traders, we need to know when that is there because we need to present, you need to protect the positions that you're in. If you're pretty far into profit, and all of a sudden the FOMC comes out and throws a curveball into the market, you could lose all your hard work from that morning, right? Very, very fast. So again, it's about protecting the capital that you have in the markets, particularly in a trade right now, right? Particularly in a trade. Vice versa, it could give us a nice little setups if we do get a move. Going into Thursday, you can see again, BOE Bailey speaking, Mackin speaking, again from Canada. Then we have the unemployment claims number, which last week was better than expected, okay? Now, this is a number that's going to be very interesting to watch over the next few weeks. And the reason why I say this is there are now school systems that are revising their virtual plans and going to hybrid models or sending people back to school. Okay. What does that mean? I mean, I know at least in Maryland, right? Maryland, the school board yesterday just said that we are now going to a hybrid model. Originally, the kids were home till January 28th, and that's the first day they could report back. Well, obviously, private schools and things like that send kids back around here. They were allowed to, right? Public schools have not seen any outbreaks whatsoever. So public schools have said, okay, since we're going to follow their lead, do the same things they do, let's go to a hybrid. And now we're starting it in less than a month, or basically a month from now, right? A month from now. So other states are doing the same thing. With that being said, I don't expect to see this number to continue to rise. I can continue to see it come lower. Why? Because people will be able to go back to work if their kids are not home. And again, that's a trend we may see the entire month. So this unemployment number should be pretty interesting. And as you can see, it's really the first thing all week. Now, Australian Financial Stability Review, it's kind of like our FOMC meeting notes. Again, nighttime, Aussie is great to trade at night. It's one of my favorite things to do. And then finally, Friday, October 9th, we have a real economic news release, unemployment change, okay? Obviously, some jobs getting hired back, not as much as what previously was there. The unemployment rate is supposed to go under 10, back down to 9.8 in Canada. Again, that's all great news. Again, if you were only like a U.S. indices thing, these obviously are not going to affect you. But again, it's no different than any other way of trading it. If you traded non-farm payroll, this is basically the non-farm payroll numbers for Canada. Again, drop down into your binaries, your call spreads, and your knockouts, and get over there and start trading the dollar CAD. This will provide movement on Friday. It's a very big release. The news release traders have been starved the entire week, so all of us are looking at this one, and again, it should give us pretty good volume out there. Besides that, we got nothing, right? Going into the weekend, nothing, and then obviously tentative. Now, the reason why I said this is kind of a strange week is because literally when I did this, right, I have all the countries in the world. I have all the different type of news events, right? And all we got as far as real true reports is Friday, right? And we got this, this trade balance, which is not really a huge one. This is all we got for the whole week, okay? Now, what does that expose traders to? It exposes us to this, the hottest kinds of news. Now, remember before I said, hey, watch out for that B word? How about this for an inflammatory statement, okay? The EU to ignore the October 15th Brexit guideline, betting the UK will back down. Is that the most politically correct comment to make from one nation to another? Not so much. Okay, it can cause tempers to flare, and it's kind of like, oh, you think we're you think we're bluffing? Okay, try us. Okay, and then again, and actually 2 hours after that, the UK says, hey, this is one of the most positive talks we've had so far. Very big progress. So it's kind of like, who do you believe? But do you see how it's like a ping pong? Oh, this is bad. Oh, this is great. It sends the markets moving a lot. So it's important to understand, where are your actual trading positions at, right? Where are your levels? Because if people see this and the market, it goes down, right? It's weakness, right? And then all of a sudden it bounces off a small level and it's sitting down there. And then we get this talk, right? This message, message right here. And what happens? Boom, it explodes back up again. Now, for just a kind of an at-home person that's watching this on like a grander scale, they're looking at this and like, hey, we got no movement here. There's nothing to trade. It's 18 pips difference. Yeah, but there was movement as this thing went down and then came back up again, right? So again, all this is important over here. Unfortunately, this is kind of the most difficult way to trade because, again, we're kind of in a reactionary phase. We can use our same style of if this, then that type of trading, but it does make it a little bit more difficult because, again, if Jerome Powell says something that is literally the big firecracker in that bunch, it's going to blow through minor, kind of smaller time frame zones, right? I mean, there's no offense or buts about it. You need the big rock solid, the daily levels, the 4-hour levels for those kinds of things. But if he says nothing, those daily and 4 hours are actually too big. So as traders, we need to be really flexible today. So that's one of the things, when I say today, I mean like this week. This is one of those things that we need to be a bit cautious about. But the good thing about it is, there is a positive in everything. The good thing is once all the speeches are out, the market will typically find a trend, and again, the volatility is not necessarily there, right? It will continue to move, maybe slower, but it'll move to where it's supposed to be moving anyway. All right. And we don't have the big kind of potholes and things like that we need to watch out for. You just trade it on a very technical based level until the next news release is due to be out, right? And again, with what we currently have, there's a lot of different ways you can trade these things. Particularly, and again, if ECB President Lagarde says nothing, Powell says nothing, Harker says nothing, Kaplan says nothing, the market will move slowly in the direction it was moving, but it's not going to have any big, crazy, kind of springboarding back and forth. This goes right over to where, this goes right over into the wheelhouse of knockouts, because we have 3-4 days for those things till they expire. It may take longer to get there, but again, gives us that kind of ability to hold something for multiple days, right? So that's why it's kind of cool. So again, it's not all negative gloom and doom for this week, but like I said, speech week is not my favorite of weeks to be trading. All right. Yeah. And I will say this, although speech week is now, every single day we progress one day closer to the election, there's obviously going to be some major craziness on that one. So now is the time to get your position in, solidify those, your gains. Again, use your higher zones, figure out what's holding, what's not holding, where your confirmations are. Because again, craziness is about to happen. All right. So let's go over and let's go back and look at the indices. So we were actually sitting right here last week, and we mentioned we're kind of in a sideways pattern. We got a little Harry Potter. If we drop below, right, if we can get below this gap in the base here, we'd be willing to take a short. And we kind of came over and bounced off the top and kind of went back up. And like I said, we were sitting right here last week. We'd marked off these higher zones and said, hey, listen, we got something up top here. We really wanted to get up to the 11,766. It didn't. It got up a little bit higher into this 11,565 range, right? Then came back down and came back to the same level that we saw on the 30th on Wednesday last week. And again, nice basing level in front of the zone we were looking for to collapse. And again, a nice punch forward. So again, you'd have to mark that off. And there was an entry on that one. This one came in on the 2nd, right? Tagged the level, the weekend closed. And again, here's the kind of rally off of that zone. And it was a decent move, for anybody that was trading this one. You can see it went to the 1 to 3. It missed its 1 to 5 just barely. But at this point, what's it going to do next? To me, it looks like we're just going to be flat. It doesn't look like there's any movement really in this one. There's no oomph, right? There's nothing. We're sitting right in the middle of the range. Now, I will mark off this level down here. I think this level is one that we should be kind of cautious of. And again, remember, I'm not directly at the top because it's the ECN-based data, so it's a little bit off. But 11,220 is an area where price not only touched it, but ended and then gapped off of. So it's an area where there's most likely some buyers sitting down there. And again, as we get down to this level, there's a couple ways we could trade it. For me, I think the ideal situation, which provides the kind of the best focus on risk versus reward, would be coinciding with this when Powell was speaking, right? Or like a European Open, something like that. If this thing, again, right now we're in the middle, so it's not really a tradable asset for me right now. But if we can come down to this level and then coincide that with either oil or Powell speaking, even really the U.S. Open, or like a 10 o'clock reversal in the morning, those are really the best opportunities. But right now, this is kind of the range that I'm looking for, kind of top to bottom, right? And I've been drawing these on the charts, and a couple people emailed me and said, hey, these are helpful. Can you do that more? So something like this is kind of what I'm looking for. I'm looking for bearish bias in this level. I'm looking for bullish bias in this level right here. And this middle 33% kind of where we are right now. I'm kind of just in a wait and hold type scenario. I really want it to come lower, get deep. Again, buyers have stepped in here. Love this. Again, this is a higher time frame zone. I think it's a 4 hour that we drew it off of. Again, I think that's that provides the best opportunity. Right now, it's kind of flat. And again, Powell didn't really give us the oomph like we got today. He was a wet firecracker, not an explosive one today. And that can happen. But again, each day this week there's more talks and again more chance for some explosive movement. As far as the S&P goes, we're sitting here right now. We were sitting right here. Right here is where we were last week. Kind of the same thing. We did punch a little bit higher. We had this zone drawn. This zone has been here for forever. This is on the, and it's approximately around the 3407. You can see it basically took all week. The same kind of the same setup that we had with the NQ. We formed a zone below that, or right above that Harry Potter that we were looking for. And again, it came down at base, it retested, and then exploded off. Again, it shows us there's some buyers there. And what happened? Did the same thing. We came down on the second and kind of pushed off. And this one actually rallied up a bit higher. And then we had the gap over the weekend right here. And then it just went higher, and we're up at that zone now. So this one, unlike the last one, I would say I'm probably a bit more in a bearish mindset. I do like it's hitting off of a zone right now. It is an hourly. It looks like the 4 hour is just a bit higher. It's sitting up in this level right here. So we got a little bit more room to run on that one. But, again, if we can get one more candle on this hourly to the downside, giving us that red, green, red confirmation, we could see this thing fall back to, potentially this area in here, right there, right? Again, there's a little bit of a gap and a pullback there from Friday. So I would say that's probably a decent level, but kind of the same thing. Right now, I'm looking for kind of a bouncing back and forth in this range, and same thing. Right now, we're in the upper quadrant, so not quadrant, but the upper period, I guess. Is period threes? I think period is threes. I know for hockey, it's like, they do periods, right? But anyway, in the upper third here, right? Upper third, we are in the range where we were thinking, hey, listen, we got to be bearish this one. We've seen sellers step in. Let's take some type of a bearish position. So like it better for that versus the NQ. Now the Dow, the Dow has done the same thing, right? It looks almost like the S&P. We were sitting, we were sitting right here last week, right here, right? And we kind of came down, we snagged that little tiny level and went back up. And you can see that there is a 4 hour zone. It looks the same thing. It came down, it grabbed this 4 hour zone. I can push it here, you guys can see it. It grabbed that zone here, very small though, right? Punch across, grabbed the zone here, bounced, and then kind of took off. So really between, here's the Dow, there's the S&P. You guys see that they're almost the exact same pattern here. I mean, you don't really get much closer than that, right? So kind of the same thinking. Again, we're in the upper quadrant looking for this one to kind of roll over and fall. Again, it does have somewhat more of a confirmation. And again, bringing it back to this 1 to 3, it is also sitting right here approximately around where the gap was, right? And if I had to draw this one, I'd probably say you need to make sure we are out by this level. So it's not quite a 1 to 3, but it's also setting up for the same type scenario, right? We've rallied up to a higher time frame zone. This one is in the 4 hour, because you can see the dotted line here. I'm looking for this one to kind of give us one confirmation break and, a run back down into, this 27, 666, 664 range, right? But again, for me on this one, kind of the same thinking. I'm looking at this one and saying, hey, listen, here's our top side, here's our middle, here's our bottom side from there. And I'll do it that way. So again, thinking more bearish here, and I'm thinking more bullish here. Okay. All right, so that would be the Dow. So let's jump over across and go to the currencies. Now the currencies, they've been a little bit bouncy back and forth. Now, not incredibly much different, right? I mean, we're sitting here right now. Let's pop this over. Let's see. We were sitting right, let's see, the 29th at noon is right here. So in a week, you can see that we are about 12 pips different. We rallied up about 80 and then kind of came back down again. This was a drop of about 84. Unfortunately, we got new levels that came in. We never touched them again. There was a smaller level here again on the second. We had that push down and then rally. And then obviously the market ended and kind of went back up. But again, it's kind of staying in more of a consolidated area, consolidated region. It's taking basically one full day. It's kind of like one session, one session, one session, one session. And what I mean by that is kind of like, here's a session, right? Here's a, kind of a sideways session, right? And then we have a, one session that goes up for, 12 hours, right? And then we have 12 hours of going sideways, right? Was it this one? No, it's this one. 12 hours of this, and then again, finally pushes back down again. So for the most part, I wouldn't say we're really trending in this pair at all. I know in the larger time frames, we are still very, very high in the curve. I think as far as entries go, yeah, there's a minor entry here. We kind of missed it for a 10 o'clock entry this morning. And it may be an area that we bounce off of, but I think really the two areas that I'd be looking for kind of shorts and longs would, again, be up top here and down here. Now, we do have Australian data. Let me see. Where is that? Oops. I just wanted this one. That's actually Thursday night. We get the good Australian data. Um, hmm. I was hoping we'd be a little bit closer. I thought it was tomorrow night, not Thursday. Probably here to here. This is probably how I'd run this one. Right now, again, using kind of top and bottom. And I like it to get to the extremes either way. Like I said, we're basing sideways. We can do it on a smaller time frame as well. I mean, you can see this is a level that, again, last time it based, it popped, it tested, got front run. So there's a possible level in there. Maybe 1 o'clock we see some type of a bounce off of it. It's only 10 pips, so we're not talking about a whole lot of risk in this one. But really, again, that's just us staying in the same channel. I'd much rather take a long off this level down here at 71.08 than this level, but again, that may be all the market, really offers it at this point. What are you going to do, right? Aussie yen kind of looks pretty similar, right? We have the top section we marked off the 73.30. We never got up to there. We did have a level down here at 75.06 that we mentioned. Let's see, make sure we have the right time here. Yeah, we're good. The 29th was right here. Right here, right there. So actually, I guess this was actually the next morning. So you guys would have seen this level, but 75.06 was the entry we put in. And again, all we've done is kind of channeled sideways. Obviously, inflation, the quote about inflation is not helping the Aussie in whatever sense. I think what day this week will move this one the most? Probably the FOMC notes tomorrow. Maybe. Between FOMC notes or Thursday's morning unemployment claims, that should give us enough move either direction. And both of these, I think, are very, valid entries. Again, you got this one here, and again, bringing it back into the middle. So that's a great one as far as, how to trade the curve. Again, if I'm using this level right now, again, bottom part, I like that one. I think that one's good. Top side, kind of the same thing, right? Top side, this is an area that we've marked off. The indicators marked it off. Again, it's been a strong level. It's been untested. And again, brings us 1 to 3, 1 to 5 back, kind of right in that middle range again. So either of those is good. So, best way to handle this one is probably 76.30, set an alert. 75.06, set an alert on the bottom side. And if you can get to either of those two ranges, again, not bad trade setups as far as kind of risk to reward. Again, time it with when we have news or something that can provide a catalyst. Because right now you can see, besides an out, 3 hours down, we haven't really had much movement at all. It's just been grind. Slow. Boom, boom, boom. Slow. All right. So we need a catalyst to get this thing to go where it needs to go. All right. Right now, I'd say I'm probably a bit more bearish. I think the 75.06 would be. I think that'll trigger before the top side one does. It just looks like today it wants to. It looks like it wants to push on, a little bit lower to the downside. Okay. Going across the euro again. So. Sorry, guys. I'm between the allergies and the allergy medicine. It's like I just feel like a camel that I just need to drink more water. So here's what we drew last week. We were sitting right here, right? We had a small level right here, and again, we marked this off as 24.16. We did end up triggering that one later on that afternoon, about 10 p.m. at night. So again, had you attended last Tuesdays and you were looking to get short this one, you did, and it ran for about 70 pips to the downside. So this was a nice trade setup. It ended up triggering twice. So for some reason, if you were sleeping at this one, again, you can see that the second one was even more, right? I had drawn this for my guys, looking for basically the non-farm number to spike down and give us kind of a clean entry down before it popped higher. Unfortunately, it just kind of based sideways, went a little bit up, and ended up going higher. So we had the right direction. We just didn't get the entry back to kind of a conservative level that we were looking for. Right now, and again, let me move this across. I guess I'm going to have to use probably this range right now, right? Probably this range. It needs to go a little bit higher, but I mean, there's our top 30%. Here's our bottom 30%. I think either of those two probably provides okay opportunity. This little level right here, again, this is a little bit more advanced. My students know what wicks over wicks are. Again, this is not one that I would take for you guys, but again, 122.46 on the downside provides some decent opportunity. 122.06 as well. And then top side, let's see, on the 4 hour, yeah, there's a quite substantial level there. I'd say probably around the 124.76 is a decent level. Like I said, it's already been front run. It's making another attempt, and it's getting front run again. Two ways you can play this one is actually I guess couple ways we can do it. You could take a break of this low here, and again, play this from the upper quadrant into the lower quadrant. I gotta stop saying quadrant. I'm sorry, guys. That would mean that there's 4, but there are 3. But again, taking this and running it from kind of a break here. Oops, not that one. Keep clicking that one for some reason. Taking a break of this level and bringing it back down into here would be kind of a possible trade as well. And the reason why is because this was more or less 16 hours of straight up, only a little tiny bit of a pullback. So again, a break below the level there. And again, there's a zone there. So we could potentially take this off of probably there would be the safest. Let's remove this real quick. Let's change this to a pink. Oops, not that one. A pink. Let's throw our risk to reward tool on. And again, that's not a horrible trade setup. Takes us from right at the top quadrant and putting us back a little bit lower. Green right there. There we go. Something along those lines. And again, this would be one of those Harry Potter trades. We could probably shrink it a little bit. I was trying to use the top of that level. We're only looking at about 12, 13 pips risk. So again, rather small. Again, you could take it on the pullback. It probably will bounce off of this. But again, if we can get to the 1 to 3, we can also get back down to the 1 to 5. And again, that's just taking it from the upper quadrant back into the middle or deep middle, and maybe potentially going all the way across to the bottom side. Okay. I don't have it up today. Hold on, let me pull it up real quick. I meant to do this every week. I forget one thing. It's kind of one of those things about being old. But I wanted to make sure that I had the Nadex up this week. I wanted to make sure that I got just to see if there's any knockouts close to it. Let's see here as this comes up. Knockouts. Let me go to Forex. Let me go to Euro Pound. That level is sitting. I'm gonna steal this one right here. Puts us around 124. So again, knockouts with those Harry Potter trades are a little bit harder. Those are typically binary-based trades, unless it stops something out on the top side and then we get another one. Because remember, for it to come through, it would have to break, right? If this was the top side, there's no way the top side can be lower. There is one knockout, 124.96, which is sitting again, which would be perfectly placed. Because look, 124.76 to 125.01 is the kind of top side of this zone. There is a knockout at 124.96, which is sitting right here, right? So again, in the upper, probably, I don't know, 10, 15% of the zone we're looking to get short. So that's a potential opportunity for us later in the week if you're interested in taking something. Setting a little on that one for 124.76. As far as the Harry Potter on this one, again, we need to get a break of it. It's got to move about 35, 40 pips to break below that. Best thing to do would be to set an alert somewhere down in this area. And that would be approximately, let's see, 124, right? 124. All right, so again, depending on your risk to reward tolerance, there is a knockout in my eyes up top. You guys can grab that one, or again, a break of 124.06. Looking at the pound yen. So the pound yen, this is supposed to be a super exciting base pair. And last week it was when it was like, Brexit is on, Brexit is off, Brexit is on. And right now it's just kind of going, it's getting a bit exhausted, right? So you can see this is kind of what we're looking at on a sideways basis right now. I have to say overall, again, we kind of had this kind of umbrella kind of pattern on the top. It pulled down, it pulled back, it's dropping. I would say ideally, again, 138 and 134.50 are really the ideal situations. There's obviously plenty of movement, plenty of pips to grab in here. But even on the lower time frames, we just don't really have a lot that's, really rock solid. Like you look at it and you're like, yeah. I mean, this one down here is an hourly level. It's not bad, but again, we're talking about being 140 pips away. The reason why I'm a bit cautious of this one, and yes, we do have sellers up top. We do have buyers right below where we are. This is on a 30-minute chart. If tomorrow, and again, we only have 1 week left to go before the deadline. If tomorrow or Thursday or Friday, we see a news headline that says, the EU and UK have come to a preliminary agreement that just needs final ratification on the, trade deals post-Brexit, obviously this is off to the races, right? I mean, again, that would be extremely positive. It knocks out one of the biggest obstacles that the UK has right now. That's going to move. That's going to be some real estate that this thing covers. And is a 30-minute level right here that, is a total of 15 pips wide going to last? No, it has a daily ATR of 137. Something like Brexit or any type of news about Brexit, that could easily move this thing 200 to 250 pips in like 4 candles, right? In like 3 hours, basically 3 hours, 4 hours. So again, are these little tiny levels here on the 30 minutes going to hold? Probably not, right? You need something bigger. And again, that's why I'm using kind of these hourly levels here, as well as, again, that's a 4-hour level, and the 4-hour, they kick in right here and here, right? 4-hour levels on top and bottom. I think that's the best way to be able to play this one. Again, doesn't mean there's not intraday plays on this one. And again, from basically the London Open today, more or less kind of a rally up and then a retracement back to exactly where we were. Okay. Again, watch that one. Pound dollar, you can see we had this level marked off up here, the 29.78, and we hit it last week. So make sure the timer is right on this one. We were sitting right here, guys, last time, and we mentioned it needs to go up. Well, here's the up that we had talked about, the 129.78. So had you guys got into this one, many of you that have followed this program for a while hear me mention the course, parabolic retracements. Nadex, I did a special broadcast for Nadex. I want to say in the spring. I've done it once or twice now. This is the ideal example of a parabolic retracement. Okay, we went from one level in one candle, obviously a parabolic based move. This was a 155 pips in less than 1 hour. Came up and smacked itself into a higher time frame. And what did it do? It was a parabolic move, and then the parabolic retracement brought us back to the origin of the move. Okay, so if you guys were familiar with that one, or if you're not, you can go look that up. And I think if you go to Nadex's YouTube page, you can find it. If not, just search parabolic retracement. I'm pretty sure you will find it that way. And you'll see there's a big Nadex sign with it, even if it's my hosted one or Nadex hosted one. But all we did was we basically pulled back this week, and now we've pushed lower. I have to say, on a technical basis, we are definitely high on the curve on this one. I am more bearish focused this one right now. I think, again, I think there's more positive for the dollar right now than there is negative for the UK. You can see that, again, positive news of the UK comes out, it spikes back up again, but it didn't last very long and literally just kind of flipped and rolled back down again. This also just happened to be, I mention this all the time. Here is the hourly zone right there. I'll leave it green because I'm going to delete it, but there's the hourly zone. And you guys can see, I don't know if you guys can see it. Look at the bottom of the screen right here. What time did this level get hit, right? From the US Open, which is right here, right? 9 o'clock, the 8:30, 9 o'clock, it was basically straight up. 10 o'clock kicked in, we turned and rolled back over. Again, so just an example of how there is intraday movement. You're talking about 44 pips. So a decent amount of movement based off, again, 10 o'clock reversal time frame, okay? If you are new, I'm throwing a lot of terms out today, and I feel like you guys are going to be a little bit lost, and I apologize with that. You can email me afterwards and kind of, hey, you said Harry Potter, what the heck does that mean? You said 10 o'clock reversal, what the heck does that mean? These are just different strategies that I trade and I use, guys. You guys know that for those of you that are on the channel. Harry Potter is the momentum breakout. You guys know that 10 o'clock is my absolute favorite time. That's where the most setups are in the morning for me. Again, it's after the initial retail response to the early morning news. And then what happens, it hits 10 o'clock, and then it reverses back from where the original move was. This is a prime example of that, okay? Euro pound. Now, you may say, hey, listen, shouldn't there be a lot more news in euro pound? Now, check this out. Obviously, this was news, right? Boom, boom, and boom, right? Flat, no news, Brexit. No news, Brexit. No news, Brexit. Right? This is bad. We're going to call their bluff. And then this is the pound saying, hey, this is the best session yet. Boom, right back down again. So this is a prime example. Let me go to a higher time for a second, delete these real quick. Again, this is kind of what I'm thinking as far as the positioning. Right there. But you guys can, you guys get what I say about how this one is really at the mercy and at the whim of any type of release. The word Brexit, right? The B word, the B word does nothing. I mean, again, today was the perfect example. We're going to call their bluff. Bad for the pound. Best session ever, right back down again, then we're basing. So it's not really moving. I still think 91.54 was the last time we really had strong downward movement. There was some in here, and was there a trade set up? Yeah, but I don't know. I mean, it's been so much time here, and there's wicks above, but I'd love to say I would have called that one, but I'm going to be paid. I'm going to be play the patient card and be like, hey, listen, I'm waiting for here. I think that's a much better place to take it short, and vice versa on the bottom side. Now let me check this one real quick. Let me see where we have knockouts in this one. So it looks like, whoops, boom. Aha. So this bit of movement right here, again, we had a nice push up, a nice base, and then this thing got hammered to the downside in a very parabolic base move. There just happens to be, right where my cursor is, right here, right on the other side of that position, there happens to be a knockout bracket. Okay, so if you are kind of drinking the Kool-Aid, I guess, and you guys are getting on the supply and demand train here, we are looking for areas where we've had very clean, strong, long-bodied candles. Here would be a perfect setup for one of those type, base trades. And again, using knockouts. Again, this is one of the newer knockouts that's over there. Pretty excited about having this one. And again, it's always nice when you get kind of line up, things that line up and match up like this. Downside, they're a little bit farther off. Unfortunately, they're a little bit long, but there is one that's at 9006. Again, a little bit far down there, a little bit far. Again, we can see how it bases, but that top side one is actually not bad. If price comes, I mean, I don't know if it is, right? I don't have a crystal ball. I don't know when it is. But again, if we have a general rally up in the next 2 days, 3 days on this one, which would be pound weakness, maybe an interesting trade going into Thursday, Friday, right? Or again, maybe even next week. Maybe we'll get lucky next week and have 2 in a row. Euro dollar. So euro dollar, kind of the same thing. Again, I thought I deleted these off. Pull this. All right, so we were sitting right here last week, and we mentioned that we had a level that we were looking for, right? This, again, 1762, because we were right here, and we are like, hey, listen, it's basing, it's been tested. Let's look for a short. The short did come in, and you can see it pulled all the way back again. We're really not much farther away from that position right now, because again, you can see it pulled back down. We've only really moved 8 pips in the last 24 hours, so not really the biggest of movers right now. So again, if you were in this one from last week, and again, we were sitting right here. This is 12 o'clock last week. You guys can see that this is what your trade setup was, and this one moved about 36 pips in 2 hours, 2.5 hours. So again, small base trade on that one. And this was a US, this was about an 8 o'clock in the morning trade. So this would have been news on the 1st of last week. So that was the 8:30 news. This was unemployment claims last Thursday, personal spending, and the core CPI-based data, okay, is what drove this one. So that's what I said. This week, we do have those unemployment claims numbers again. We may have another shot at something. But unfortunately, where we are right now, I would have to say that we need to wait really till this one comes up top here. Reason why is we got a little pullback, but there's nothing. There's nothing. This thing just dropped to the downside, and we had a little tiny pullback, but that's where current price is right now. Let's see. Delete this. We'll push this across. Make sure it's clean. Right there. Okay. Right now, there's probably a short in here. It's a little bit riskier, and again, because we have a basing level here and a small basing here, it's not a clean. Like this is a clean push down, right? There's no pullbacks, right? Here, even on the push up, right? It rallied, it based, it rallied, it raised, and it rallied. So it wasn't the cleanest of entries, but there's probably a small position in there. As far as this Harry Potter goes, let me see. I gotta do it. Oh, it's on the other side of that one too. It's not the cleanest of entries on this one, unfortunately. Is there something in here? Yeah, there's probably a short. Again, we may get a little bit of a bounce off of this one this afternoon, but there's probably a short into here. I'd be very curious to see where this one is tomorrow morning at the European Open. I'm typically not awake for it. If I am, it's because I've woken up and I can't go back to sleep. But for any of you West Coasters or the guys that, I know there are people out there that stay up late. If you're awake for the European Open this week, I'm sorry, for tomorrow, if we're floating and we kind of have a Harry Potter entry on this one, that could be an opportunity to take the short at the open. I'd be really focused on kind of where we are on an hourly or a 30-minute level, only because we are a little bit too far from any of these 4-hour levels, right? The 4-hour levels up top here and up top, and those are the only two really clean one we have. There's nothing on the top side holding this back. But again, we've had a big kind of push, and it's ran into some kind of people here. again, I could see a rollover and kind of a, oops, not that, some type of a push in this area right here. Okay. And again, is it ideal? No, it's not ideal. And here's why. I mean, if I'm using this 4-hour zone, and this 4-hour zone is my really top and bottom, where am I sitting right now? Right? If this is my top 30%, right? And this is my bottom 30%, where am I sitting? I'm sitting right in the middle. Now, does it make sense for a Harry Potter trade leaving the top area? Yeah, absolutely. Right? I mean, we're sitting right there right now. Again, I don't have, it's not measured exactly the 30, 30, 30, but is there a potential when we leave the top to go back lower? Yeah, absolutely. And again, the target would leave us low too. So it would be leaving high, going to low. And that's why I said there is a potential trade setup sitting in this area right here. Oops, not that far, but somewhere along those lines. Okay. Let's see. What do we got here in dollar CAD? So dollar CAD is just really chopping sideways. We had a Harry Potter set up here on this one. Last week, we were looking for a pop and a break, and we never got it, right? Remember the rules of Harry Potter, right? Eventually, this zone is going to break, and it's been hit 1, 2, 3, 4, and 5. 5 went pretty deep. I thought we were going to get that entry. We didn't. It didn't break, so we never got an entry, but doesn't mean we delete it from our charts. We're going to keep it up there. So it's still live. We just haven't gotten the entry on it, right? So right now, it's kind of like, what do we do with it? And this is kind of where we're coming out of. This is a 4-hour chart now. So again, larger kind of time frame. It's a wick over wick. It's there. It's tested. It's not clean. You see this. There's small bodied candles and a bunch of wicks back and forth again. So I wouldn't say that this is really, again, I love when it hits a green level and bounces out of it, but it's not anything that I was interested in trading. It just took too long. No explosiveness. It's kind of consolidated in, right? We have the highs coming down. There's a high here, high here, high here, high here, and this one broke, but we're kind of stuck within. I mean, really at this point, this range, right? Let's drop this one lower and check it out. Yeah, look. We had a high here, high here, high here. So we're kind of at the top where it's been turning around. And bottom wise, look, it pinched down. And then what happened? A higher low and a higher low. So kind of a consolidating in on the dollar CAD. Tomorrow we'll provide some movement for that, lack of anything else. We have the oil inventory report at 10:30. That'll provide some opportunity, but really until Friday, I'm probably not going to spend too much time on this chart. There's just not enough sitting there for me to really look at. And again, Friday it has, the Canadian dollar has it has the unemployment news, right? The unemployment rate and the unemployment change. They're basically their non-farm payroll is this upcoming Friday, October 9th. And again, what you do is you look for zones. Look for 30-minute zones or hourly zones. And again, the Harry Potter trade setup, if price is back up there, that actually may give us a pre-news entry to the downside, or vice versa. Wait for the news and then wait for a spike above, pull back, and continue push up to 133.68. Okay. Don't love the dollar CAD right now. It's probably my least favorite that we've looked at so far. Dollar Swiss. All right. So dollar Swiss. We're sitting here right now. We were sitting, let's see, right here. Let's see, the 29th at 12. Right in here, right? And I mentioned it's coming lower. It's kind of in the middle. And all it did was it dropped a bit lower, pulled up. And then again, we got this news that we had a big push, push down. Here was the weekend. It never retraced and just kind of pushed. So at this point, it's hard. This one's hard to trade, right? This one's been difficult. We had nice movement here at 92.26. I think if we can get any type of US-based rally on this one or any type of Swiss weakness, I think that's a decent level to take a short off of the 92.26. I don't think, let me see, did I check it? 92. So there is a knockout bracket that its ceiling is sitting right here, right? There is a 92.47. So for those of you, again, that are new to other currencies or knockouts, if price is able to rally at any time this week into this zone here, right? Again, this is a 30-minute zone. The last time price was here, sellers hammered this thing to the downside, which typically is a great area for us to get in for the next time when it's there. There is a knockout sitting right up here that actually it's ceiling, where basically where it's gonna take you out at a loss would be at 92.47. So that would give you about 15, 16 pips or dollars worth of risk. Not necessarily a bad trade there, right? If we come up to that zone. And again, just like the euro pound, this one is setting up. We need a little bit of help, but if it gets up there, the knockout is lined up in a kind of perfect position, right? As far as getting long, this is a pretty choppy area back and forth. It's kind of hard to pull much out of that. On an hourly basis, you can see that we did have some levels down here. And again, this is a decent balance. We could probably use that one. That's sitting down here at 91.03. 90.87. There's a 90.97 and 90.47. So unfortunately, there's nothing ideal on the downside, but we do have a nice topside short there if price comes up to there. And again, there's news coming up or news drove it up there. God, I would love that. If we could get FOMC to punch this up in one candle, God, I would be all over that one. That would be great. I would love that. Maybe we can, call our buddies at FOMC, be like, hey. No, I'm just kidding. I don't know anybody at FOMC, but if they punched it up there again in a parabolic move up, that would be a great way to take a parabolic retracement, roll over, kind of back to the downside. So again, set your alerts at 92.26. I think that's decent, and 92.47. That would be your upper level of risk. That's actually where the knockout. Again, old platform people, knockout number 4. New platform. You guys are gonna have to find it yourself as far as the ceiling goes. Okay. Looking at the dollar yen. All right. So dollar yen. Dollar yen. We were sitting. Let's see. Right. Let's make sure. Take this off. Let's see. We were sitting right. This one is not the most exciting. Right here. Right here. This is where we were sitting last week at this time. We are exactly 5 pips from where we were last week. Okay, 5 pips. Now, I did mention that we had areas top and bottom, 106.07. You can see we got nowhere close to it. It literally hit this zone on the, what is it? This is an hourly zone and kind of gave us a few bounces to the downside. I did mark off 109.01. So again, we had a parabolic move, a very, very fast move right into that zone, turned and flipped and has rallied all the way back to where we were. That was all we had from last week, really, for this one. Like I said, we were sitting right here. Hold on, right here. So again, you guys should have been able to get this one short a few different times. Here, as well as here. Now, for those of you that are starting to take what we learned here and going forward with it, we did have a nice kind of basing level. And again, this is a 10 o'clock reversal yesterday. And this morning, it turned out to be about a 5:30 in the morning reversal. But again, it was an area that was tested, right? We had basing, a little bit of a gap in here from being over the weekend, a rally up, a little test. And what happened? This was the Monday morning. Oh, God, bad. 10 o'clock, reversed all the way back up again and again. That test this level, gave us a second entry and punched higher. So right now, again, I don't think the markets really have much bias or feeling one way or the other. Again, high, lower high, lower high, lower high, lower high. Go to the other side. We have our low. We have a higher low, and currently sitting in a higher low. So it's kind of consolidating in. Hopefully, and when I say hopefully we get some type of movement here, some type of an end of the day rally or something to get some kind of a oomph out of this one. But really, we can talk about where the price is now versus where it was 7 days ago when it's 5 pips. It's telling you there's just not a lot of movement in that one. And even in the last 24 hours, this one has moved 16 pips total to the downside. So it's just not a screamer right now, right? This one is this is the wet firecracker from 3 years ago. But a little bit of a dud. The humidity is taking control of this one. Okay. All right, so that's the last of the currencies. Let's go into the commodities. So here is gold, right? Here is where we were sitting last week in gold. I marked this one off because, again, there's been a bunch of movement on this one. And we'd marked some levels. We had one up here at 1917 that we had talked about. Looking to the left, it was the last time. And again, this is where the level was formed off of right here, right? It was a punch up, a base, and a drop down, and it was tested, right? It was tested. It tried to get up there and sellers step in and said, oh, no. And then pushed all the way and started this entire rally. Well, there was our entry. The entry came in again on the 2nd, right? The 2nd was last Friday. If you guys were trading it, what do we have Friday? We had non-farm payroll. Okay, so let's make sure I'm getting my correct times here. There we are, 12. So right here, right? This would have been about 1 o'clock. So here is non-farm, not necessarily non-farm. Let's see, non-farm dropped this. Hold on a second. The second, there's 1, 2, 3, 4, 5. Yeah, non-farm was right here. Okay. Ended up giving us this kind of punch up into that range early, and then kind of pulled it all the way back. Since that time, it's done nothing but consolidate. Now, we did go back up to that level this morning, and some of you may be wondering, hey, why is gold going down very, very fast? It's because of Powell's statement about seeing global inflation not going higher. Again, the weakness of global inflation. That's what drove it down. And we're kind of sitting in the middle of the range. Right now, I would say that, this is an area here. It's kind of hard. There's a lot going on here, right? We have, I would say, there's a 4-hour zone sitting here. I'm going to draw this just so I can help explain it a little bit better. I'm going to draw kind of this is our not as the area where we're looking to, you know, I'm gonna make this white just so we're all on the same page here. There. So that's the area that I'm kind of focusing on, kind of top and bottom, right? I'm using the same level here, the 1917, the base up in here. Again, sellers stepped in, sellers have stepped in multiple times to that level. We're sitting right now, again, in this kind of middle 50%, makes it a little bit dangerous. Now, areas where buys could come in, right? Again, with a total collapse, we still have the Harry Potter sign here, but I think if we can get any type of a confirmation balance off of this 1892, I think that's pretty decent, right? There obviously will be inflation coming in at some time. So I do think this will continue to chop back and forth, right? And again, confirmation bounce, meaning that it does, instead of the Harry Potter breakthrough, it would basically hit this level and do this. Come in, it would pull away, right? It would retest itself again and not go as high. And then that's where we take off and we go higher, right? Kind of one of those things, right? It goes somewhere, again, it would look like, you know, kind of like this, right? Something along those lines is what it would look like. When I say confirmation bounce, that's what I'm talking about, into this level here. It hits, it doesn't break the bottom, it punches through, and then when it pulls back, that's what gives you your established level of risk in this one, like that. Something along those lines, right? Obviously not here, it would be up here. But that's what I'll be using. Again, confirmation bounce entry on that one. No, will delete trend line work on that one? It's fine. I'm going to delete other stuff, and I don't want to delete all of it yet. So yeah, so that's what I'd be looking for there, guys. Looking for, again, some type of a confirmation bounce off of 1892. Otherwise, if we can get back up in this 1917 range, or even maybe just a little bit higher, up here at 1922, I think there's probably some decent shorts up there also. Now looking at silver. Silver, we had a level up here, and we mentioned we had a couple levels, top and bottom. Let's see, we were right here last week, okay? So we were actually forming this level last week, and we had a pullback and a drop. So it would be right here, and I think that's why we had this one marked off at 24.32. So we came up to the same level, and again, the same type of inflation news this morning has dropped us back to the downside. On this one, I really like the 24.95 level. If we can get back up to there, I definitely think that that's a good level where I'd be comfortable taking a short. Again, I would have to see what news rallies up to there, but the way that this level was formed, I'd be willing to take a risk on that one. Downside, again, the 22.66, I like how this was a rally point. There was this kind of drama right here, and again, that set us off here, and maybe again, depending on if we have some type of news, I could be swayed again, getting into something around 23, but it would have to coincide with some type of news release or, European Open or, I guess even a U.S. Open, but really just like a European Open or, I don't know. Let me see. I'm trying to see if there's anything even like a lower. Maybe the unemployment number. Maybe on next Thursday. FOMC obviously would be the first thing that would pop up in there, and that could. I don't feel like FOMC is going to be. I don't think they're going to be so bearish on gold and silver. I mean, they're going to mention inflation, but typically they're not like, oh, there's no inflation, we're going to keep interest rates low forever. Woohoo! No, they're always about, the Fed is they're banks, right? They're interested in controlling inflation and fostering inflation. They want there to be 2% inflation a year. They don't want there to be lower than 2%. So anything that I say or they say, I feel it would be more of an inflammatory thing, which would actually lead us to bump back up again. And again, this 23.30, probably not interested. Again, spent a lot of time here, chewed up a lot of the sellers. Again, there obviously is some above it because, again, descending wick. But I think if you guys want, a clean entry, I think 24.56 is probably the best one in my eyes, right? Let me grab oil real quick, and then we'll be on our way for the day. Let me grab our full feature chart on oil, and you guys will see what I'm talking about. Now, oil has rallied back pretty well at this point. All right, let me bring this in. We gotta definitely do some adjustment on levels here. I didn't update this one yesterday, unfortunately. So I talked about oil. These were oil last week. I talked about it closing somewhere down here. So let's see. Last week was the 29th. So we were sitting right here. Okay, we'd mentioned this upper level right here. Again, price had been turned away. It wasn't the cleanest level, and I mentioned that this is probably a better one to take for Nadex because we kept punching through the top, but for the most part, this level is holding pretty firm, and we were having a lot of basing in that level. And again, this is what we kicked in last week on the 29th, right? I mean, it just boom, dropped back down again, and this was the kind of free fall that I was talking about, going from $40 all the way down to $36. That's $4 in a pretty quick, succession. Since that time, and again, where we kick in over here on the 4th, we've had the exact opposite. So nothing, and again, I can say this again, nothing really justified this type of a fall in this, right? Here's a parabolic move, they got retraced. Here is a big spike to the downside. And when we change weeks, this was the end of last week. This is since the weekend, okay? All we've done, we've brought ourselves right back up to where we were. And again, here's, you can see at the bottom, it says 6 and then 16. On the 29th at 16, we were right here. So has it moved in a week? The answer is no. But we talked about getting bearish this position. Again, nice pop down, the inventory, and again, more pops to the downside. So inventory is going to be interesting tomorrow. At this point, I would say we've had such a pop this morning. I would say that we are probably a bit more in line for another short tomorrow with oil, but I would be cautious because, again, with school starting to go back, people will start working, people could potentially be driving more again. Again, school buses and everything else. Again, I think that will bring back some of the demand that we're currently not seeing. So I do think on a fundamental basis, which I'm not a huge fundamental trader, but on a fundamental basis, there could be some bull stepping in. But right now, I have to say, the pop that we've had this morning, I have to say I'd be looking for this one to roll over today, again, in line with what we see for tomorrow with the oil inventory report at 10:30. But again, with lack of any other real news tomorrow morning, 10:30 tomorrow morning being a reversal time as well as oil inventory could be a pretty nice little setup. And again, watch some of these levels. This 45.50. This level's not bad. Again, this one here was kind of the last time we had a base, and again, based here, base, bounce off that same level. So watch that one. This could be a bottom or a top for that oil release number. To the downside, though, I'd be looking for targets at 37.60 if we can break through the 39.04. All right. So with that being said, that concludes for what we have today. Make sure you mark off next week, October 13th. I can't believe it's already October 13th. This is just 2 days before the Brexit deadline. So we will probably have some craziness between now and then with the EU and UK situation. So again, keep your ears, keep your eyes peeled, keep your ears to the ground. Any questions that you guys have, you're more than welcome to email me. Probably the easiest way is email support@keeptradingsimple.com, and I will try to explain anything that you guys have. If not, I will catch you guys next week, and good trading. Take care.